This is Cyber Explore, your trusted source for the latest in technology, finance, health, and modern lifestyle trends. War is on the news. Tensions are escalating in the Middle East. Oil prices are spiking. It's March 2026, and we are living through a paradox. So, what is actually going on? I welcome you back to the channel. Today, we aren't just going to tell you to stay calm and diversify. Let's get into it by first looking into the historical blueprint. First, we have to talk about history, because if you understand the pattern, you stop reacting to the noise. A recent analysis by RBC Wealth Management looked at 20 major military conflicts since World War II. 28 days. Now, I know what you're thinking. But what about oil? What about inflation? And you're right to ask. The real danger isn't the bullet, it's the price of the barrel. When we look at conflicts that disrupted energy supplies, like the 1973 Yom Kippur War or Iraq's invasion of Kuwait in 1990, the S&P 500 suffered double-digit losses, around 16%. But here is the nuance for 2026. Currently, oil has surged past the $100 psychological barrier again. So the old playbook, it's being rewritten. Second, the weird vibe of 2026, data versus doom. And that brings us to the current moment. We are seeing a very weird vibe in the market. Just last week, we saw stocks slump heavily in Asia. South Korea down 8%, Japan down 7%, as Brent crude spiked. We are living in a dual narrative world. Narrative A. The world is on fire, inflation is coming back, and the Fed can't cut rates. But here is where technology gets scary. We just witnessed something that frankly has never happened before in human history. A viral think piece sank actual stocks. I'm talking about the recent Substack post titled The 2028 Global Intelligence Crisis. Here is the twist. It was later revealed that the idea for that essay wasn't just academic speculation. Think about that for a second. In 2026, a hedge fund can use the speed of the internet to turn a piece of speculative fiction into a self-fulfilling prophecy. This is the new world order. Technology isn't just helping us trade, it's being used to create the news that moves the market. Third is the algorithms are in charge now. So, how do you navigate a market where algorithms react to fake news and real wars at the speed of light? You have to understand the limits of the machines. I came across a fascinating piece of research recently about algorithmic trading. But here is the dirty secret. Algorithms hate chaos. If you are a high-frequency trading firm doing tens of thousands of trades a day, you can adapt quickly. Why? Because in a war economy, yesterday's data doesn't predict tomorrow's reality. Take the foreign exchange market, for example. Instead of just following price trends, these advanced systems look at the topology of the market. Liquidity depth, volatility surfaces, and macro sentiment. Fourth is where the smart money is actually going. All right, let's get practical. It's not just piling into tech blindly anymore. The flows are getting very specific. First, the defensive shift. When the Middle East conflict escalated, where did money go? The US dollar. Second, the sector rotation. We are seeing a massive divergence. Winners. Defense contractors are an obvious play. Lockheed, Raytheon. These names benefit from ballooning NATO budgets. Losers. This is crucial. JP Morgan just turned bearish on European mining and steel stocks. Fifth is the contrarian case and viral topic segment. Here it is. The war alpha isn't about defense stocks anymore. It's about prediction markets. Bank of America recently put out a list of their top themes for 2026. Sandwiched between AI and GLP-1 drugs was something interesting. Prediction markets. Why does this matter for your stock portfolio? Because prediction markets are often faster and more accurate than polling or news analysts. Bank of America notes that this could be a game changer for existing players like DraftKings and FanDuel, and Robinhood is positioning itself as an early leader in this space. The viral thesis. In a world of fake news and weaponized Substack posts, the most transparent source of truth might just be a decentralized betting pool. That is the edge in 2026. You may ask, what do I do now? Okay, so we've covered a lot. History says we recover fast, but oil shocks hurt. Technology is making markets faster and more manipulable. So, what is the actionable advice for you? 1. Understand that volatility is now a structural feature, not a bug. Expect 5% to 10% pullbacks. They are normal. If algorithms are getting better at navigating chaos, you need a system too. Focus on the mission-critical tech. Bank of America analysts believe we are in the mid-cycle of a multi-year AI build-out. My conclusion: war is tragedy. The stock market is not a moral compass. It's a discounting mechanism. In 2026, the intersection of geopolitics and technology is creating a market that is faster, more volatile, and more bizarre than ever before. If you enjoyed this deep dive, hit that like button. It really helps the channel. Thanks for watching. I'll see you in the next one.